Good morning, traders. It is Tuesday, April 22nd, 8 a.m. Eastern Time. Welcome to another video with Digital Goats Academy. I'm your host, Antoine Farrar, and welcome to our market overview segment where I pretty much discuss my thoughts on the direction that the markets may travel or what they may be doing this week. So now that we're here, you know what I'm saying, I'm looking at S&P. So welcome to the channel. If you are tuning in, make sure you guys hit that like button as well as comment, and make sure when you come in and out, you hit that subscribe button. It definitely helps the channel grow. So we've been following indices for the past, basically the beginning of this year. And what I have in front of me right now is S&P 500. So the two currency pairs that I've been looking at is US 30 and S&P. Now, I'm not gonna remove any of this information because it's relevant to me. But if you've been following along on my channel, you've kind of seen what I've talked about with using this information right here, right? So we don't need to go into the whole S&P actually drop down. We know that. Now, what we're looking for is the market getting back to correction levels? Is it trying to push back up to these levels of support or resistance that it broke out of? And I think that's where we're heading. One thing that we did analyze is that since last week or since 2 weeks ago, 2 weeks ago that S&P, I don't know if US 30 did this, but S&P 500 created an inverted head and shoulder. So that was the sign of a bullish pattern right there, which the market is sticking to that. So unless the market starts coming back to basically this gap, it did do that. Now, one thing that I'm excited about is that it did come back to that gap like we kind of expected. The one thing that I wanted to see is the market touch the top of this gap, if that makes sense. So this purple zone right here, where the inverted head and shoulder. So you see the inverted head and shoulder is highlighted right here to the left-hand side. I didn't want to see the market. Now I did want to see it, retest the top of this because that would technically be the resistance level, which would turn into support. I was okay with it coming back into the gap, but seeing a sign like this is definitely one I wanted to see for more confidence that the market will more than likely buy up from here. Now, the thing is that is it going to create support down here, or is it going to start creating that foundation to create an uptrend? So indices kind of work like this within their market cycle, right? So just follow along with me real quick. So where I just drew the support structure at, right? Now this should be like the leading momentum right here, right? For the buy side, unless it violates it, right? There's two things that could happen. The market could come down here and create support, you know what I'm saying, to validate that this is buying up. But indices tend to work a little bit different. They'll have like a trailing momentum. Well, they'll have like a momentum candle. So this position, this move right here from, what is this? 3 o'clock, so 1500 yesterday, all the way till 1 a.m. this morning. 1 a.m. this morning. This is momentum. This is buying momentum. Well, how do I know that? If I go to Heikin-Ashi, I should see green or blue candles. And yes, I am seeing that. So even though we are seeing like a correction, you can see the momentum, it's not strong, but the momentum is to the upside. We do have 8:30 coming up. We do have 9:30 coming up that could push the market down to lower levels. But this is what I'm looking at. I'm looking at this as the start of the momentum. Now, what indices normally starts doing is that they'll have like a starter candle, if that makes sense, or a starter position, and then they'll start creating support and orientation to this. So now that we already have a previous level of resistance, which we have to treat as support unless it actually continues pushing down, the market should either try to create support around this candle or a little bit around this red zone. So you'll have something like this. You see me kind of draw it out, and it actually follow I wouldn't say exactly, but close to what we actually drew out. Let me get it. So on a line chart, it would be something like this. Don't judge me. Yeah, the squiggly line is it's messing me up to where like, but you get the idea. Like if we turn it to a line chart, follow along with me. You see what I'm saying? And I try to make sure like my squiggly line is almost close enough to the same color as a line chart, which is not, but we want to be able to see the differences. But what I was trying to establish is that you see these two valleys right here. That will technically be the move where it would create support. So we could be ranging here this entire morning until we get a breakout if the market is following that pathway, right? So if the market is following this pathway, it should stay either touch into this red zone or stay above it, unless it is going to create support at on the higher time frame close to the gap and then push up. Now, I do know that the market definitely loves to come back and test these gaps. So I could definitely see that happening versus not happening. You see what I'm saying? Everything is up to how the market reacts after the 9 a.m. candle is open, and then you can kind of have like what direction the market may be traveling from there. You just have to find your position. So this is what I'm looking at for S&P. This is exactly what we wanted to see within indices. You know what I'm saying? So it's not going to be on point or pinpoint accurate, but in the ballpark is good enough. So the thing again that my community wanted to see, we wanted to see how close that the market would try to get down to these lower levels. And even though the structure is made over here, which is exactly what we want to see, we want to see the structure like that versus if the market came all the way down here, because then the structure could allow it to still continue pushing down. So you see how we have a dip already. Again, this candle's still open for this 8-hour candle still open for the next hour. But I like that we already have a valley showing up, just like we have down here in these support structures. And it's above, of course, we went down here, but the foundation or the structure actually closed above this gap, which is again what I wanted to see. The thing that I wanted to see within the gap was like a wick touch. Normally, when you see these wick touches with these gaps, that's solidifying that, man, I don't want to be there, but we could have the possibility of the market trying to retest this level again. Until it moves away from here, we don't know if it's basically clear for takeoff, but we do know that as far as right now, since we've been up from this buy candle, from this bullish engulfing, that the market is up. I mean, even when you scale down on a smaller time frame, it's up from the position that it came from a week ago. What was that? A week ago? 2 weeks ago. Excuse me. So that's pretty much my analysis for S&P. Let me make sure. Oh man, I almost thought I wasn't sharing my screen for a second there. Like I did all that and everybody didn't get to see it. That has actually happened before. So I'm glad I did look at that. Now let's look at US 30. Well, one thing that I will say about the dollar index is that even though we have bullish momentum, we are in a mild recession right now. People aren't talking about it. I don't know why, but we're currently in a recession. It's not strong, and it hasn't heavily impacted the economy, but we are in a recession. Which is kind of, and they've talked about this, it being at a mild recession. I can't believe it came all the way back down here. Yo. This was the area that I was looking at. But anyway, Bloomberg was talking about a mild recession, which we are now in. But because we are in this recessionary territory, what it looks like is that the US dollar will be a little bit more stable as the years go on versus us freaking out about inflation. So this is good and bad news at the same time. Bad news right now, but good news overall, because again, the market shouldn't get so volatile that it heavily puts us back into inflation. So what I'm thinking is that the US dollar is about to range in this area of 113 to 98. Hopefully we don't see it come back to 98 again. But I'll probably say 113 to like 101, and we'll probably start ranging for there for a couple of years before the market decides to take off again off of whatever major move that it's going to make. But I think this was just to stabilize the market, kind of put the dollar back at ease so that way we can rise. And, I'm not going to speculate on what's going to transpire from the economy, but I think this is actually beneficial if we get back to these higher numbers like 101, 102 and stuff. Now we keep going back, we keep going down further all the way back to, yeah, it's spelling disaster. And that's where we were at, what, May of 2021. So I don't know if we're coming back to that previous high that we broke out of April of, what was it, April? No, March of 2021. But that does spell bad news for the US economy if we start heading back to those levels. So I mean, the world wasn't thrown. I was trading at that time, so the world wasn't bad, but I will say that in the market, it was kind of bad between like 2020 to 2021. If you were trading like currency pairs, because they just were not moving the way that you would like the market to move. You know what I'm saying? So that's what I'm looking at for the dollar, which again, I am surprised just like everybody else, but let's be honest, nobody could have predicted this storm that we were going to endure once Donald Trump got back in office. We thought things would be a little bit positive, which I do see that, but it was the reverse effect of his last run. His first couple months, years into, his presidency, the market was booming. It was booming, but now, with the implementation of tariffs and other things that's going on, I mean, we're just upside down right now. But again, I still do stand by what I believe for like investors and traders, that this is a good opportunity, or this is a good time for business owners. You know what I'm saying? And you're seeing it being reflected in the stock market. The only downside is that, I'm in America, the American people, until it stabilizes, they're going to have to suffer until we get these things, like, I mean, and that includes me, until these things get, basically better. So let's check out US 30, and that'll be my last pair that I'm looking at for today, because again, that's the only thing I care about. And I really wanted to emphasize like where we're at in the market. So same thing with US 30. You can see US 30 came to the top of my gap. Well, this was even better to me because it pushed down into the gap versus just hovering on the top of it. But again, look at the basics of what's happening, even though you may be confused about indices. What is this right here? Let me hone in or zone in or scale in, as some people like to say. What is this right here? You see this wick? See this bullish candle at, well, I think this is called the upside down hammer, right? That's a bull move. And again, that there's different candlesticks mean things. So it's definitely important to be in tune with what candlesticks mean, because that'll help you, especially on the higher time frame, to identify what type of move the market may be making. But anyway, you see that there's a wick right here. Well, guess what? On a smaller time frame, that's a candle where this wick is at. So if I draw a line to where the top of that wick is at, and I meet to where the market came down to, let me see. 94.3. Okay, that's a straight line. For some reason, when I draw it, it doesn't look like a straight line. Well, guess what this is? We know what this is. Previous high slash resistance broken. We got to emphasize that it's broken. So this resistance was broken by this bullish candle. And what did the market do? It returned all the way back to what? This resistance. How long did it take to do that? 2 weeks. It's crazy how indices operate sometimes. You know what I'm saying? Like, so when you see the break, you got to be prepared, because you can see it did fake outs all the way down, and then it actually filled a candle. This is the better position, even though it started building that rejection to say that the market was going to start buying up. I think this was a gap over here, and the market did actually cover that gap. You can see that there was another gap created that the market made, pushed away. So now we should be getting ready to cover these gaps in the market again. So I'm looking at the market to break this area specifically, but we got to get past this gap already right here. What is this? Around 38,600 to basically 38,500. So 38,600 to 38,500. That's what we're looking at the market to continue pushing up from once we break these levels. Understand, once we break it, if we're not retesting down these lows or testing these levels, what it's probably going to do is test this gap up here. So we'll get a break, and then the market could want to stay here until it decides to push up. Now, we are getting more momentum to the upside than we are to the downside now. That's the good thing. So we shouldn't see like sideways movements for long. And if it is, it'll probably be the rest of this entire quarter two. Then when we go into quarter three, we should see more trending patterns, more movements within the market. But to me, this looks like the bottom of US 30 for this year. You know what I'm saying? Which means what? That anything above this should be buy zones and, short-term sells back to a buy zone. But for me, I like to stay in the direction the market is going, so that way I don't confuse my narrative. But again, if you're a scalper or intraday trader, take every opportunity the market gives you. Selling opportunities like these, that's a move. Like, I'm not going to miss that. But I'm talking about like short terms that are like more confusing than anything. This right here, I probably wouldn't even have liked to take that sell. You see what I'm saying? Because look how the market reacted once, it started building rejection and stuff. This move would have been definitely better, you know what I mean? But I do think that this is the bottom. So like if we're going to continue pushing up higher and higher, you know what I'm saying? We're going to break these highs that the market created this year. You see what I'm saying? So 45K is basically where US 30 created its high. Once we head back up there for like a third time, that'll be the third time. We'll probably hang out there for a little while and, continue to reject the levels to respect the foundation in the market. But after that, after we get whatever news that's going to trigger it, it should be buy city from here. I'm telling y'all, we're already seeing this stuff. We're already seeing this stuff being implemented in cryptocurrency. So we've been talking about, is Bitcoin going to remain bullish? Bitcoin is bullish and stuff. Even from this weekend, we talked about it within my Discord community this weekend. That tech rally information that came out within the New York Stock Exchange. Is there a major tech rally that's about to take place? Yes. So you can see where we're currently at. The market is violating basically this entire sell pattern, and we're back on the opposite side. You can see that we're maintaining a bullish presence above the resistance high and above the resistance low, because this weekend I was expecting the market to come down to this resistance right here. Not the high, but this smaller resistance, because I wanted to see if the market, and it did try to touch it, but it stayed above it. So for me, as long as it stayed above it, we were clear. As well as this resistance as well. It maintained some type of structure within this resistance, and we have our EMA following it through, basically gonna push the market up. And there's one more thing you can add to it just to kind of see what the momentum looks like. Buy city from here. You will have pullbacks. So as you can see, you have pullbacks, but let's look at Bitcoin. Look at what it's been doing. Again, start from where the market is at and make your way back. This right here, even if we ignore this because this was consolidation, this is the buildup of momentum. So from here, we should be going to the moon. And I don't mean like, Bitcoin is about to go to 250, maybe, but my first thought is at least to go back up to the high, 108. And then from there, we can go to 120. And then from there, we'll have to assess what the market may be trying to do. But again, for my traders out there that follow patterns, what does this look like to you? But actually, let me just use the actual pattern so it doesn't look confusing. Where is it at? Help me find it, traders. Help me. Why am I struggling right now? Oh, okay. I always do that. Like, I don't know how to navigate through this. Probably should have did it. Now remember, this is digital, so it's a little bit different on the formation. Me and one of my old trading partners, man, we talked about this, that the formation of cryptocurrency is digital, so it's not going to necessarily be in the traditional Forex pattern that you're used to seeing. It's going to be digital. Its movements are digital. So where you would see like a valley where the market would reverse or continue pushing up, you would probably see consolidation, and it would probably be in almost like a square formation. But tell me this does not look like an inverted head and shoulder. Right here. You know what I'm saying? Like right here for everybody to see. Like, I don't know. But I do know that the market is playing to the direction that we want it to go. So for me, when I identify patterns like this, even if I'm confused, shit, it's just what the market is showing me. So, okay, it's definitely an inverted head and shoulder because we are buying up from here. You know what I'm saying? That's how I think. So unless it violates, which is still a good sign, because if it violates this pattern, that means it's not bullish. You know what I'm saying? So even if we come back down to these levels, like the market is violating this pattern and we're probably selling to lower levels. But I don't think that. I think the momentum is to the upside, like I said. And then we'll just be heading back to these previous levels, maybe these resistance levels along the way, or this previous low. That's what I'm thinking of. Probably this previous low, because this is the last form of consolidation. And what do we know within indices and cryptocurrency? The market is definitely attracted to consolidation. So 100K point like 7 is where I'm thinking that, no, 101K is probably where I'm thinking this is the first move that after we've had this breakout that Bitcoin is heading back to. And then once we get close to that level, we'll have to analyze the market, or you know, draw up some charts to see what it may be doing and get some information within the fundamental space, i.e. news, or what some of these crypto experts are saying. So that's pretty much our market overview for today. It's showing the signs on what we've been talking about this entire year, what we wanted to see, how the market is reacting. I mean, we saw that crypto was going to come down. We thought that maybe Bitcoin was going to come down a little bit more, but it's maintaining that buy opportunity within that 74K. So it hit that 74K and it really never looked back. And that was the area that it broke out of last year when you know, Trump won the polls. Like as soon as he won in November, as soon as he won in November, everything just started skyrocketing. So to me, that looks like the break. We now have our retest in Q2. And now it's just opportunities. So traders, make sure you find your position. Don't miss these opportunities. I look at this as a year for redemption for a lot of traders, or a year for new traders who are starting off to really make an impact. I'm not saying that you can't be successful later on, but I do think 2025 is important and it counts this year. You know what I'm saying? You don't want to be in 2026 talking about your goals that haven't really entered from 2025, if that makes sense. So appreciate everybody that supports me. Again, make sure you like, comment, and subscribe. I'll see you on the next video with Digital Goats Academy.